We saw inflation tick up in the month of May to 12.4%, really bucking the general positive trend we've been seeing in inflation. New expectations?
Well, for June, there might be some positive relief here because of base effects, particularly on food prices. So some seasonal benefits. But going for the year as a whole, and I think the trend will then revert to stubborn lower double-digit inflation, because the whole variety of factors. There's lax fiscal policy, then there's imported food costs, because now of course they have a new inflation index in Nigeria, and this better reflects the household consumption patterns, and the household consumption patterns take a large share of imported food components. So that's a factor. Then minimum wage, of course, is coming in different stages.
Yeah.
So yes, perhaps today might be slightly better, but year as a whole, not much change.
I mean, let's talk about those factors that impact on inflation, because in general, consumer prices have looked lower over the last few months and quarters. But as you're saying, imported food means a huge drag on inflation, and food does constitute a huge component of the CPI basket. But we're also told on the other side, a mitigating force are better oil prices that should strengthen the Naira.
Yes, it should strengthen Naira, but of course the high oil price also feeds into inflation, because the Nigerians import the vast majority of their petroleum products. So that's another element: imported food, imported petroleum products. But on the Naira, yes, I mean the currency is supported by the oil price, and but Nigeria, unlike most its peers among emerging market oil producers, hasn't seen much of this benefit. So the central bank has been struggling somewhat to hold the line on the currency, on balance successfully. But if you look at other emerging markets which are oil producers, the battle for the authorities there is to actually contain appreciation.
Right.
This is not a challenge Nigeria's had.
Let's talk about credit flow, because that's been a major issue in Nigeria: how to grow the real economy, how to stimulate entrepreneurship in the economy. We know the banks have had a peculiar situation with the bailouts and the reforms, etc. But are we going to see the taps being unscrewed a little bit when it comes to credit?
Well, there are some signs among the healthy banks. I think what happens, at the start of each year, all the healthy banks, i.e. those that were not rescued by the CBN, all the healthy banks guide to quite healthy, robust growth in their loan books. But as the year passes, the growth in their loan books disappoints somewhat. Now this year we're in the same position, but this year we have some reasons for optimism here, and the main reason is that AMCON, which is the bad bank, if you like, is largely through its remit, at least in terms of buying the bad debts off all the banks. So once that process is complete, so you would hope in the second half to see some pickup in the banks' loan books, particularly the healthy banks.
I mean, Gregory, you mentioned fiscal policy earlier on, and we do know that the central bank governor has been very vocal about what he sees as unbridled spending by the government of Nigeria. And because of recurrent expenditure and those kinds of things, it's had a bearing on inflation. To his credit, the new president did take to the Senate a better looking budget for the 2011 fiscal period. Is this trend likely to continue?
Well, this better budget, it depends what you compare it with. It's better than the Assembly's last budget from March. But actually, it's not quite as tough as it appears, because one of these familiar compromises took place, whereby the total of spending was brought down, but actually the threshold for the oil price was raised. So the spending that will be available to the three tiers of government actually has hardly fallen at all. But no, I mean, clearly it's an improvement on the March effort from the National Assembly. And there's the related point, of course, which is the current debate about the minimum wage.
Yeah.
Now, the minimum wage has risen, or is rising, because most parties haven't yet implemented it, is rising from 7,500 naira to 18,000 naira per month. So this obviously is behind a large slug of the rise in current spending, and also, of course, it poses some inflationary threats further down the line.
Right. Policy instruments available to authorities. I mean, the Central Bank's Monetary Policy Committee will be meeting near the end of July and to decide what to do. Already they've started monetary tightening. How much further do you think they need to go on this tag?
Well, as you say, they're meeting next week, and I think more tightening next week, perhaps 50 basis points, and at least one more before the end of the year, I would have thought. And there are several reasons. One is that now that the bad bank, the AMCON bad bank, is carrying out its remit, the central bank is able to devote its energies, its monetary policy, to trying to fight inflation rather than just encourage credit creation. So that's one factor. And privately, the central bank has given a pretty strong signal. It does not expect to attain its objective of single-digit inflation by the end of this year. So that's one fairly strong signal. Then, so this is helping drive monetary policy. Maybe 9% policy rate by the end of the year, I would have thought.
Right. All these factors coming together, Gregory, how attractive do they make Nigerian securities? Because the CBN has now removed that restriction on foreigners who own government debt. But foreigners who consider getting into Nigerian securities, they'd look at inflation, they'd look at monetary policy and interest rates, they'd look at the general state of the economy. Does it make Nigerian instruments attractive?
Well, it's more attractive clearly because now you can enter and exit without the 1-year holding period. So that's a great step forward. What the response will be? Well, we might get some idea later this week because the Debt Management Office, their next auction is taking place of FGN bonds. So that might give us a signal. I would have thought that some non-residents will be attracted to the lure of double-digit yields on the bonds, assuming that they're comfortable with the exchange rate. But others, I think, may continue to look elsewhere because on the point of the yields, since we're saying there's some tightening coming up on the official policy rate, you would probably assume also a bit of pickup in yields, perhaps. So it might be a question of holding off for the non-resident investors. But no, a very strong signal and a very positive one too from the central bank.